Hello to all the Web3 enthusiasts out there. This is Mike speaking, and welcome to the new exciting episode of Synopsis. Our today's guest is the co-founder and CEO of Sweat, Oleg Fomenko. Hello, Oleg. How are you today?
I'm very, very well. Thank you, Max, for asking. And thank you for having me here.
Yeah, so today's discussion is going to be pretty huge, and I believe there will be uh, a lot of insights and details. So let's get straight to the action, if you don't mind. And
Let's dive in.
And to begin with, so to warm up, and since it's your first time at Synopsis, let's start with the introduction. Could you please go ahead and tell us about your background and how and why you personally joined the Web3 industry?
It's a long story, but I'll try to cut it short. Oleg was born in Soviet Union into a family of engineers. Probably was supposed to be an engineer, but I really wanted to travel and see the world. And
Mhm.
I started leaning towards languages and ended up starting my career in marketing for my sins. But that led to me starting to work in Europe already in 1995. I was thinking that I would go back to Russia very quickly and take my European experience and build something in Russia. But kind of it panned out differently. First lived in Austria for 5 years, then moved to London, lived there for 22 years. And at the beginning was working for large companies because with Russian passport, you couldn't be an entrepreneur. You were always on a working visa. And I frankly, being born in Soviet Union, I wasn't thinking of becoming an entrepreneur because the word предприниматель, which is sort of an equivalent of entrepreneur, at least back then, had this connotation that sooner or later you'll end up in jail. And that wasn't something that was terribly attractive to me. So I wasn't looking at becoming an entrepreneur until I really had a bee in my bonnet. In the UK, I was encountering a bunch of different problems that were not solved, and I realized that there were no products to solve them, and I started dabbling to build products, to build MVP, as we call them right now, minimum viable products, and registering companies. And I realized that as a foreigner on visa, it was very, very difficult. So I set the target to become a British citizen, to get a British passport. And the day after I got my British passport, I quit all my full-time jobs and became an entrepreneur. And the first business I built was called Flow. Sorry. At the beginning, it was MFlow, but then it became Bloom FM, music streaming service. And I grew it to 1.3 million users in the UK. We had a catalog of 40 million tracks, and we were seriously competing with Spotify at that time. Those were early days. And unfortunately, in geopolitical turmoil, that company perished. And I went for a run to clear my head and realized that I couldn't do even 5K at a very, very decent pace, or pace that I expected from myself. Because I used to climb some of the highest mountains in the world, being fit as a fiddle. And here I am on kilometer 3, holding onto a tree and going, what the hell is going on? Why am I so unfit? And I started talking to other people, and I realized that everybody, regardless of if they're an athlete and they train a lot, or if they are, kind of completely not paying any attention to physical activity, everybody wants to be more physically active. But they blame the fact that they're not as active as they want to be on time, money, motivation, weather outside, kind of there's gazillion different
Mhm.
excuses. And my education was in psychology and sociology and behavioral economics. And that really sort of perked my interest because if problem is universal and everyone uses different excuse, then it might be worthwhile digging deeper and really see underlying reasons for something like that existing. And I realized that the reason why nobody is active as they want to be is because nature didn't build us to be active. Nature built us to survive, which means not to squander calories, not to spend calories, but to preserve them, because that guarantees survival of your tribe. And the only time when, our ancestors were running is if there is a mammoth on the horizon, you need to kill it so that, you have enough food, or there is a saber-toothed tiger about to make food out of you. Otherwise, you sit around the fire and you preserve those calories. And imagine Neanderthals running around doing pull-ups, push-ups to look good. By the time mammoth shows up, they're already dead. So nature gave us this behavioral feature that's called present bias, which is focus on right here, right now. You either focus on food and you're focusing on avoiding death. Everything else, you preserve calories, you sit around the fire. And this is a very, very strong programming. And we continue having this in our brains, in our software. So unless there is a mammoth or somebody is about to kill you, we really, default situation is to sit. And right now, you don't need to hunt mammoths. Mammoths come on plates, kind of 3 times a day. We don't have lack of calories in most of the world. So we are sitting, we're gaining weight, and we're not as active as we want to be. Thankfully, nature also gave us an answer. How do you overcome present bias? And the only answer is instant gratification. So the thought was, how can we give to humanity instant gratification in exchange for the most basic binary act of being physically active, which is a step? And the idea of Sweatcoin was born out of this thinking in 2014. As name would suggest, we already wanted to be on blockchain back then. And we looked at forking Bitcoin, which was the only blockchain in existence. And we realized too slow, too expensive, no smart contracts, lots and lots of technical work. But our mission was to make the world physically active. So we started focusing on developing a product mobile application, because that's the only place where you can track physical activity, because you carry it with you when you're physically active. And we've spoken to Vitalik Buterin in 2015, who was working on a secret project back then. It wasn't called Ethereum, but it was too early because it was a research grade code in early 2015 when we spoken to him. But we got excited. We realized that Bitcoin already exists. Vitalik is working on what became Ethereum. There are other teams working on other blockchain projects. So within 12 months, there will be a blockchain fast enough and robust enough for us to move. Why don't we launch Sweatcoin centralized and then move on to blockchain? But when we launched Sweatcoin with the proposition it pays to walk, it became really, really big success and very quickly. It grew to million users, 10 million, and we were constantly looking at blockchains, and there was no blockchain that could support our scale until year 2021, when all of a sudden there was Solana, there was Near, there was Avalanche, kind of layer two started appearing, and they had a lot higher speed and a lot lower cost of transaction. So we analyzed 14 blockchains in 21, 22, and we chose Near as a chain to build on. And in September 22, we launched Sweat and Sweat Wallet. The reason why we could not move Sweatcoin onto blockchain, because by then we had 120 million users around the world, and you cannot overnight just tell them, oh, everything is going to change. Tokenomics is going to change. User experience is going to change. And we realized that we needed to have another token and another application for those that are interested to move from Web2 and pure health and fitness into Web3. And right now, Sweat and Sweat Wallet have 22 million token holders and 3 million active users in Sweat Wallet. And we are literally the simplest and easiest way to walk into crypto. You've got legs, you install free app, and you can start accumulating cents and dollars. And instead of doing what it used to be an on-ramp, going and registering somewhere and having to pull your credit card out and having to buy two, three, four, $500 worth of crypto in order to start learning things. With us, you install free application and you can start learning by, tokenizing the value of your physical activity. And once you learn how to send, receive, how to stake, how to breach, how to do all of these things, and you gain your confidence, all of a sudden you are a crypto native, and the simplicity and the cost of learning the ropes and becoming, proficient in crypto are negligible in comparison to every on-ramp that existed before us. Oh, and the last thing, when did I look at crypto first? 2011. My school friends are all extremely technical and extremely clever, physicists, mathematicians, and, programmers at the highest level. And one of them brought up Bitcoin in 2011. And, that was the first time when I read Satoshi's paper. I read a couple of self-published books, which were just PDFs. And I got really, really interested in technology, which allows you to have reliability of transactions, avoiding double counting, while not having a middleman or somebody in the center who you have to trust and who is a human that can potentially change their mind or have nefarious intent. So that's that's my journey, and that's why in 2014 we started thinking about Sweatcoin.
Wow, that was hot. And I can not even say that it was an introduction, it was an entire presentation, and you touched so many topics that we're gonna um, discuss today. So, out of what has been said, I would mention, first of all, a great background, and you're a real pioneer in the field of Web3. So, you joined far ahead of the crowd, ahead of the masses, and you see how it's not just developing, but how it originated. Well, sounds great. And yeah, ladies and gentlemen, we see they have a real expert here. And what has been mentioned already also is the motivation of actually beginning this all pivotal moments from switching from being a natural born engineer into entrepreneur, and then beginning your project, going blockchain, adding crypto. Wow, and that's worth admiring, I would say. And okay, let's split all of what's been said into several segments
Mhm.
and discuss them in more detail. So
Sure.
the first thing, let's speak about actually the most pivotal moment, actually adding cryptocurrency to your project. Could you please tell us what are you personally most and least happy about this step, going blockchain, adding crypto?
Mm. Well, that's a very big and multifaceted question. I think, given that we started Sweatcoin in 2014, that was always the vision for us. Because, as I said, in order to make the world physically active, we need to create instant gratification in exchange for steps. And the simplest and easiest to explain and understand motivation is financial, sadly, but it's true. And who would pay? Where can you find, a huge amount of money to actually pay people to walk? You can't. So you have to create your own currency. And here, the most exciting thing, I think for me, dawned on us that there are other things in the world that is the action that you perform as a human that we know is extremely valuable and is an asset. Specifically, I'd like to refer to you paying attention. And this is sort of personal story as well. As I said, I started in marketing. And of course, companies spend a lot on marketing and advertising, which effectively is to attract your attention. And we knew that attention was valuable, but nobody knew the value of your individual attention. And when I was asking questions in 90s or early 2000s, kind of what's the value of my attention? people wouldn't even be able to understand it. Right now, we know it down to 18th decimal because of Google and Facebook. And since then, we built $7 trillion attention economy. And Google and Facebook are probably the biggest names that drive this economy. But pretty much anything content and kind of advertising or promotional is part of the attention economy. But if you think about it, what is it? It's basically an economy built around you paying attention, and you being physically active and you paying attention are extremely similar on three dimensions. One is they're both valuable to you. Nature gave you this ability in order for you to survive and to be successful. Second, there are other people and entities that financially benefit from you paying attention and from you being physically active. Advertisers, of course, is the obvious one for you paying attention, but for you being physically active, beneficiaries are insurers, healthcare providers, your employer, your family. For a long time when my kids were younger, their pocket money were dependent on the amount of Sweatcoins or sweat they generated. You want to have an extra ice cream? You know what to do. You need to put one foot in front of another more times rather than sit and play computer games. So, it's extremely beneficial for the world economy to make the world physically active. Economic externalities are immense. And the third thing, both are scarce. You don't have an unlimited amount of attention. Neither you can be physically active for an unlimited period of time, and you don't have enough calories. So if we manage to build $7 trillion economy around the value of attention as an asset, then it's only a matter of time until we build movement economy around the value of physical activity. And I would like to build it with decentralized sort of ethos in mind, rather than replicate what we've built in attention economy. Specifically, one of the worst things about attention economy, $7 trillion, the way it works, Google takes your attention, sells it to the highest bidder, puts all the money in their pocket, and gives you 2 gigs with your Gmail. That's not an equitable exchange. You created that value, but you get a fraction of that value back through that product. Now, if we're building movement economy, there is a better way where we track, verify, and tokenize the value of your physical activity and give it to you, not keep it to ourselves and give you something very, very low value in return, like Google or Facebook do. And we think that this is a lot better way because that motivates you to be even more active. That creates a lot more positive economic externalities, and it distributes wealth created to people who create this wealth rather than to those who cleverly put themselves in the middle and manage to extract all this wealth without giving anything back. So that's what we're building. Sweat has always been conceived as a token that is tokenized value of physical activity. And like attention, 25 years ago, nobody knew the value of attention. Right now, we're still grappling with the value of physical activity, but we know that it is immense because just economic positive externalities from physical activity, if you estimate them already now in existence, they would be in excess of $10 trillion on a global scale. So movement economy is going to be bigger than attention economy. And we just want to make sure that it's not Google or Facebook that build it and extract all that value into their pocket, but we build it in a way that millions, hundreds of millions, billions of people are benefiting from the wealth that they're creating.
Well, awesome. So the motivation and the mission are completely clear now. And by the way, a great example with your children pocket money. And I think that many parents watching can learn something from this. And yeah, so you had to solve so many questions, deal with so many obstacles. Out of all of this mess, what can you name the biggest hurdles where the economy has faced to date?
Moving into crypto is extremely complicated because of the fact that all of a sudden you have a token and the price, and instead of building your product and making the world physically active, you end up fighting on two fronts. You're doing what you need to do because long-term health and wealth of the planet depends on it, but you also spend an awful amount of time on token price and kind of playing all these games that are, that were invented in Web3 in order for the token price to, kind of perform in line with expectations of the community. And the biggest issue that I see for us and for me is actually driven by the structure of Web3 and what we are used to being the drivers of success. And the drivers of success historically have been narratives. I tell a beautiful story how this is going to change the world, how in the future every single person is going to have this in the pocket, how they will have to have this token. And if the narrative is good and exciting, what happens? People pile in, the token price pumps, and we go, oh my God, this is an immense success. But what happens as a result, the founding team and early investors sit there and kind of go, okay, we've made really, really interesting promise, but the price is high right now. Why don't we just sell some tokens and take some money off the table? And they do. Some on purpose, and they just specialized in telling beautiful narratives and then rug pulling. Some just because, they can. But what happens next is you need to deliver that vision, right? Because, people piled in, they believe your promise. Now you need to deliver. All of us, if you founded anything and build anything, know that it is a lot harder to deliver what you described than to describe it. And then you hit one wall, two wall, three wall, four wall, five wall. And at some point, especially if you're already taking a lot of money off the table, you go, Jesus, this is too hard. And people bail. And there are countless examples of projects that made a fantastic promise that, had a huge spike in the token price. And now these teams are nowhere to be seen. So the structure of Web3 and the fact that it is a very, very early industry and where people respond to narratives and promises as opposed to product performance and delivery is one of the biggest issues for me personally, because I started in 2014. I already put 11 years into it. I know that I build long term. I don't want to end up having boom and bust, where all of a sudden there is a huge expectation and expectation of delivery nearly instantly. So, for example, 6 months ago, I had to completely change strategy, not the project, not what we build, but our strategy. And I stopped talking about the promise of future profits. And we're now focusing on building stable, profitable business. And the way we sort of reorganized ourselves and delivering this is very simple. We now have a corporate structure that doesn't have shareholders. So Sweatcoin is a Web2 business that we started, as I said, in 2014. But Sweat Foundation is a shareholderless structure where beneficiaries are token holders only. There is no way for shareholders to participate in profit distribution. And also the way we structured ourselves in terms of financial flows, we would be stupid as a business not to spend 100% of our profit on token buybacks and burns, which is pretty much like a kind of smart contract. We don't have anybody who is not token holder that can benefit from the business, and we have kind of an environment where we cannot spend less than 100% of our profits on token buybacks and burns, because then we would pay tax on profit, which nobody wants to pay. And if we spend this surplus on token buybacks and burns, which is cost to the business, it effectively is the way to put it back to token holders who, by 98%, are the people who are physically active. That increases the value of their physical activity. That makes them more physically active, that creates additional economic externalities, that makes them more keen to invite their friends, family, and everybody else into the application, who are also becoming more physically active, creating more economic value in the world. And this allows us to generate even more profit to reinvest back into the token. And if you look at the token as the value of physical activity, it creates a virtuous circle where more users with more activity and more engagement are creating profit that goes back into the value of physical activity. And we know that businesses that are profitable and do this are successful, not only in the good times, in bull markets, but in bear times. Aave, hyperliquid, exchanges. There aren't that many predictably profitable businesses, but if they invest into token buybacks, they're doing a heck of a lot better than those that are just selling narratives and not able to deliver.
Well, thanks. Pretty detailed again. And you mentioned several more topics that we're going to discuss, economy and users,
Mhm.
of course. Let's begin with users, since the application and the entire project is built for people. Could you please actually tell us who are these people using Sweatcoin app? Who are your average users and advertisers?
Yeah. So let's separate. So Sweatcoin, despite its name, and it was named to be crypto, but we couldn't put it into crypto rails because kind of by 21, 22, as I said, we had so many users. You can't force, kind of people, kind of into such big changes without their consent, without their desire. So there is Sweatcoin, and then there is Sweat Wallet and Sweat. And they are sort of partner businesses. They are aiming for the same goal, but they're completely separate. Sweat Foundation is token holders, beneficiaries. Sweatcoin is a kind of venture-backed sort of standard business with shareholders. And when we are looking at Sweat Foundation, the things that we are focusing on, as I said, building a very, very simple corporate structure, financial flows, and the business model that is possible to turn into smart contract in the future. So my vision for Sweat Foundation is that I will not be needed, and neither our team will be needed, on the horizon of 5 to 7 years. And everything is actually going to be done in the DAO by voting, by simple voting. And one thing about our DAO, which is different from a lot of other DAOs, is that we have one token holder, one vote, instead of one token, one vote. And the reason for it is because we're building for the next billion people, and we have to learn from best examples of representative democracies. Can you imagine if President of the United States was elected not on the basis of one human, one vote, or one citizen, one vote, but on the basis of your bank account balance? You would probably have 10 people in the country choosing a president, and everybody else would be completely disenfranchised and disengaged. And if we are building products for the next billion people, we cannot do that. In our DAO votes, we already had some votes that order of magnitude higher participation than any other DAO vote that you can find. One was 383,000 people voting on the proposal. And we are leaning more and more on this, and any decision that affects tokenomics and kind of long-term token economics of Sweat are always taken by the community with participation of token holders. We cannot take this. This is in our charter. So I don't know if this clearly answers your question, but we're building for the future. And I would like to make sure that the value of physical activity is governed by hundreds of millions, hopefully billions of people who optimize this community and this smart contract and the token economics to engage more people and to create more value And the way to create this value is by making the value of physical activity as high as possible, because it is motivating more people to join, and those that join to be more physically active.
Wow, sounds great. And you mentioned the perspective of not of you and the team not being needed to be involved like in 7 years in the what's
Mhm.
happening. And what about the little bit closer future? Let's speak about a year ahead from now. Could you tell us what is on the roadmap of economy for
Yeah,
this year?
Sweat Wallet. Yeah, Sweat Wallet and Sweat. Yeah, the biggest thing that we are working on right now is the simplest for the user multi-chain support. What I mean by that is we exist for 3 years. And what we've noticed is that people come in, they move their feet, they get their cents and dollars. Then they potentially put their card out and they start owning not just Sweat, but other tokens. And then they would write to us and say, oh, I want to go and experiment with meme coins on pump.fun. Or I want to go to this chain and to this game. And because we were focusing on near, we didn't have seamless and beautifully simple sort of interface to allow them to do that. And what I've noticed that then this person would go and create an account on, let's say, Solana. They would install another wallet. They would fund that account. Then they will figure out how to bridge assets from near to Solana in order to play in that ecosystem, which is extremely complicated and very, very onerous process for those that have done it, especially when you do it first time. And we realized that actually, in order for our users not to go through this complexity and for us to retain these people and to continue, kind of providing them great service, we need to expand our ability to support any chain, but without any of that complexity that I've just described. So we now already have a couple of 100,000 of our active users enjoying functionality where account on Ethereum, Base, BNB or BSC chain and Arbitrum is created for them on the fly. They don't have to worry about keys. Those are managed through the MPC system. And all they need to worry about is just one key that manages their, kind of Sweat wallet account. Everything is done in the background by our tech. And most importantly, our users don't even have to know what gas token is. They don't need to put BNB on their BSC address. They don't need to put ETH on their ETH address. They don't need to put ARB or whatever gas token. Any action on any chain is paid in Sweat, which is made into universal gas token. We call it pay your fees with your feet. So it removes this complexity of having multiple gas tokens that you need to maintain everywhere. And as a result, you also pay less because by moving your feet and being active, you effectively subsidize the fees that you're paying anywhere. So you're paying less, and that forces you to be physically active. What's not to like? You pay less out of pocket and you're becoming healthier. Kind of it's win-win from all sides. So this is by far the biggest thing. And we intend within next year to support up to 10 chains so that you would never ever have to go and, kind of create an account, fund account, install another wallet, save keys, then potentially lose it. We are building for the next billion people extremely sophisticated technology that removes all this complexity that we as crypto natives are so used to. And I believe that this is the key to mass adoption of Web3. The biggest thing that I see as a not a pivot, but a change in Web3 is us stopping as an industry to focus on infrastructure because we now have 2,000 chains in existence and few hundred are still in development. Now, if we look at the number of decentralized apps, so products for the end users that have more than 1,000 users, and the 1,000 users is not a lot, but It removes all the sort of friends and family and some experiments, that people do, but, not really put any effort in it. If you count those dApps, the number is going to be less than 600. So using Rails analogy, we have 2,000 railway companies attracting attention of 600 carriages to run on them. That's an upside industry. That's not how future is going to be. We need a lot more carriages to run on all of these chains in order for these chains to survive into the future. In the internet times, at the late 90s, we had the largest companies in the internet world was Cisco. The largest company in the world was Cisco in 99. They were producing infrastructure. Sun Microsystems, Jupyter Networks were also at the top of the pile. Now, dot-com bubble 2000, and we ended up having a shift from infrastructure investment into consumer internet. And that gave us Google in 2003, that gave us Facebook in 2007. And if you actually look at financial returns, pretty much all the money on the internet were made from consumer internet. We are in that moment of shift from infrastructure into consumer crypto. And this is really sort of where we focusing on to build product for the next billion people that is attractive enough, give people user experience that is simple enough so that they don't have to really struggle, suffer, and learn a lot. And lastly, to let them get in without having to spend few $100s from their credit card to buy their first crypto, because next billion people doesn't even have credit cards. So this is not a route that can bring them into Web3. And the last bit is building on mobile. Web3 projects very frequently shy away from building on the mobile because, kind of historically, everyone's been focusing on the web. But this limits our ability to attract the next billion people who do not have laptops, who do not have desktops, but all of them have a smartphone in their pocket.
Wow, awesome. And one more thing about the future, a pretty general question, but still short, I would say. Oleg, could you tell us what's your personal vision of what the future of Move to Earn will look like?
Mm. Personally, I don't like move to earn as a term because, yeah, the reputation unfortunately was damaged by a number of projects who did not think hard enough about their business model or their tokenomics. And right now, perception of move to earn is that it's some sort of a Ponzi scheme, a rug pull. That's one issue. The other one is move to earn is almost kind of it's like a promise that by moving your feet, you're going to be able to earn so that you can stop working. We're not there and we're not going to be there for a very, very long time. But is it supplementary income? Yeah. Is it non-zero value? Absolutely. How long is it going to take for the value of physical activity to be so high that you can potentially use it effectively as a UBI? I don't know. I cannot predict it. But you know what? One thing I know that every single person intuitively knows that their physical activity is valuable. It's non-zero, which is the reason why 75% of liquid tokens that our users earn are staked. They sit in grow jars because people look at the price and they kind of go, no, 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 my physical activity is worth a lot more. Why would I sell it at this current price that market offers for physical activity? And they just keep it for long term, which reduces sell pressure and improves overall sort of business model and tokenomics of Sweat. So that's kind of that's the focus. That's what I am constantly thinking about. How can we get to profitability? How can we make sure that we are kind of reinvesting into the value of physical activity? Because I know that as soon as this happens, there are a lot of other people sitting on sidelines who would be very, very interested in owning our token as well. We've done a test for 6 months in 23 when we were doing buybacks before we were profitable. And we know that this works tremendously well. So for us, it is just a closing this gap. We already cover about 80% of our costs. And within the period of next 6 to 12 months, we should become profitable and basically start reinvesting back into the value of physical activity.
Wow, awesome. Thanks for sharing. And yeah, I would say pretty clear position. And yeah, we are actually getting closer to the end of today's interview, but I still have a few personal questions left. So if you don't mind,
Sure.
the first one, so we discussed the next billion users, actually the existing users. And how about you actually? Could you please tell us how has Sweat changed your life?
Well, kind of, as I mentioned, I've been climbing some of the highest mountains in the world and always been, incredibly active. Now I am seriously hooked on, this work. And, kind of, my wife is telling me that I am a crazy workaholic. However, we do have a dog. His name is Bear. And, kind of, this forces me to put one foot in front of another a lot of times per day. So I can't say that I am running like crazy, but I am definitely, using our product on a daily basis and understand it intimately. And this helps me to remain, kind of very fit. This June, kind of, I climbed Kilimanjaro for the fifth time with my daughter, who, basically she came to me and said, look, you climbed Kilimanjaro with my mom, you climbed Kilimanjaro with my brother. I think you owe me a Kilimanjaro climb. And yeah, we've done traverse of Kilimanjaro in 6 days, and, an amazing experience. Highly recommended. So, I can't say that I am going to gym because I find it incredibly boring, kind of me personally, but I move my butt all the time. My motto is move your ass, your mind will follow. And, I'm still perfectly capable of getting to the top of Kilimanjaro in a pretty short period of time.
Wow, that's really exciting. 5 times. Oh my God, so many people dreaming of at least visiting it once, not even maybe climbing the top, but you made it 5 times, and you, I would say, um, makes such a great experience for your family. That's actually the value is unmeasurable here, and yeah, you're a happy person, I would say. And
Thank
yeah,
you. Yes, I am. I'm blessed.
yeah, you are. And that sounds really encouraging. And let's make this today's discussion ending also kind of encouraging. So we have a traditional open question in the end. So could you please
Mhm.
go ahead with some piece of advice or call to action? I believe you have something to address to our audience directly. So take your time.
Yeah, I think that if there are aspiring founders in the audience, uh, I would absolutely love you guys to think not about building another chain or another protocol or another copy of a traditional finance product, but to think about a problem that the next billion people have that blockchain or crypto Web3 solves 10x better than existing products. Think mass market, because let me repeat, infrastructure era is over. The future is in consumer crypto. And if you're not starting to think in that direction, then you'll be entering into bloodbath of chains and protocols who are going to have to fight for attention of these dApps, because without end users, all of the infrastructure is not used and is effectively useless. And in order for the next billion people to come, they need to have products for them. So this is where innovation is going to be happening. So if you want to start something, think of next billion people, problem to solve for them, not the idea, but a problem. And the reason why I'm focusing on the problem is problems make your product really viable. Problems mean that people are prepared to use your product to solve that problem, and very frequently to pay for it. When you build around the idea, ultimately you're going to need to find a problem that your idea solves. It is so much easier to start with a problem and then build a product. Start small, start very, very focused and targeted, and do think about next billion people.
Wow, thank you. Nothing to add, actually. A great, encouraging ending. You guys heard everything. And yeah, for today, that's it. We discussed, I would say, many things, but so many more. We can discuss deeper, and do hope to see you, Oleg, in more episodes in the future, discussing the progress you have, discussing next milestones and the next billion people, of course.
Fantastic. Yeah, absolutely. Would be happy to be back. It's very easy to find us. Just type Sweat into Twitter. The website is Sweat with a dot in front of AT, so SWE.AT, or just go into App Store and Google Play and type in Sweat Wallet and install our application and start literally walking into crypto.
Well, a great call to action. Yes, guys, follow Sweat on socials, follow Oleg, try testing app, being involved. And as you can see, that founder and CEO is using his project on a daily basis. So you can do also. So we actually move in every day. Why not to get some additional benefit from it? So the movement is live.
Exactly. What do you have to lose? You've got legs, you move them, the app is free. It's a no-brainer.
Yeah, no cons here. And yeah, I think we're done for today. Thanks for our audience for watching till the end. If you guys have any more questions left after this pretty detailed interview, drop it in the comment section, or as I said, reach Oleg or Sweat team on socials with what you have to know more. And yeah, see you in more episodes. Bye bye, everyone.
Thank you for having me. See you.